The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional advisor. I'm Dollar Will. And today we have another reveal. Not waiting to see if other people are going to roll through, but I'm probably going to just go ahead and let them catch up on the replay. We got a lot of people like to stream all at the same time now. So, but I'm just gonna forge right ahead. That's why these things are recorded. That's the power of recording. Yesterday, we had a reveal about the success and goals being attained by Lionel, and Lionel. It made the transition. I would say broadened his trading scope, put it that way, from Bitcoin to Forex, and he's learning technical analysis, and he's having some success. But he's not the only one who's having some noteworthy success that the community needs to know about. There's another gentleman who I met in the manosphere because he was always talking on having like sideline conversations in other people's chats. You know, he would show up and people would start like throwing up stock symbols. And then before I knew it, I got into it, start throwing up symbols and responding. And we would just be like, we'd run into each other all around the Black manosphere and have these sideline conversations in the chat that had nothing to do with the topic. We would just get distracted by the money and start talking about what's going on the charts. And this brother had a thing for penny stocks, and people, that's kind of like what people think of, I would say, the shit coins. Okay, in the crypto world. But I know that people can make money on anything. It really doesn't matter. If you just have to play by the rules. There's certain strategies you have to use when you're trading things that are suspect, considered experimental. You have to be it's subject to be price manipulated because it's not a lot of what they call float. It's not a lot of trades. A small number of well-heeled traders, with a lot of money, they can move that price. Whereas with the bigger stocks, say on the NASDAQ and stuff, one person can't really manipulate that price or move it around because there's just too many people that own it. But in that penny stock sector, it's subject to a lot of pump and dump scams and stuff. So that does not mean, and pump and dump scams is people come in, they promote a stock, they go to forums and they talk it up and they create a little mania about it, and people go and buy it. The price spikes up and the promoter of it dumps their shares and makes a big profit and leave everybody else holding the bag. Now, I'm not saying that that's not true. That's true. It happens over there. But I know that if you know technical analysis, you can get in and get out with the game. Even if these companies are garbage, even if it's somebody out there is trying to manipulate the masses into buying it just so they can dump their shares. Whatever the motivation is for people buying the stock, which I maintain, we'll never really know why people are buying whatever. And I also maintain that you're buying a price action on a chart. you're not marrying that company, or I don't think you should think of it as marrying the company. Maybe the company will succeed, maybe they won't. But if you think like a trader, the trader is looking at the value of the stock and what the price movement of the stock is likely to be, and we're looking to capitalize on a gain in the stock, and capitalize off of what we call overbought and oversold situations. Prices move to both extremes. They rise too high and they fall too far. And with technical analysis, you can spot opportunities where something is falling too far and is likely about to move, because you don't want to have dead money sitting in something that's just trolling along sideways. So me and our guests, I would tell them, look, man, you're doing a lot of research into these companies, and if you add technical analysis to it, I mean, he was already having some success just doing essentially, I would say, fundamental analysis. Okay, so he was having success, and I saw that the amount that he was working already, to my mind, I'm like, if he added technical analysis to the level of work that he's already doing, my mind said his profit and loss, his P&L, is, as it's called, would like go through the roof. And it's very hard to get people who are winning to try something new. It's easy to talk to somebody who's losing and say, hey, try this. It's pretty hard to get somebody that's winning already to say, hey, try this and you can win more. Because people don't want to, they think that it's like, why, if it's not fixed, if it ain't broke, don't fix it, Why would I need to change? I'm fine the way that I am. But he didn't have that attitude. I think on the strength of watching other stock calls, I would make stock projections in the chat, and like I said, we would have these dialogues. We run into each other on the YouTube streets and get involved in these chats. And he'd put up a penny stock, and I would put up a projection for what I think, it's about to do, or where the resistance is, where it might be ready to fall. And over time, he would see some of that, enough of it come true. I'm not perfect, but he would see enough of it come true to that it couldn't, but that technical analysis couldn't be just passed off as, just a waste of time. Maybe, a couple of times, we talking about saving your profits. You could be up, 1,000%, and somebody gives you say, hey, according to technical analysis, if you might want to take your profit and run right now, and somebody, tells you something like that and it works out, naturally, I'm not going to say naturally, I'm saying the smart people like our guests, they'll get curious about it and want to know more. And so he joined the Patreon, and he started slowly adding some technical concepts to what he was already doing. And he's still growing as a technical trader. We're kind of at I never had a student like this who traded so differently from me, because I'm not a penny stock trader. And he saw the successes we were having over on the Forex side. But those successes were not any greater than what he's doing on his side. This was maybe about 6 months ago. And he was telling me, I think I want to try the Forex. And I was like, I don't know. I don't think in good conscience I can tell you to stop what you're doing, because you killing the game. I think you might need to kind of stay where you are for a minute and keep rocking these hot industries. And so he was killing it with the I'm gonna let him talk about that. I'm gonna bring him on, and I call him a champion because in that penny stock space, I mean, we hear about people making a lot of money in penny stocks and A few of them do. Most of them don't. A few of them do. And so, but he is someone that I know, directly who's doing it. So in my mind, he's the champ. The champ is here. Welcome, the penny stock champ of the manosphere, of the black manosphere, Matty Ghost.
Oh, what's up, man? Oh, I missed the the stream you had with Linnell. Unfortunately, I caught the replay though. I wanted to watch it, but
Well, welcome,
um,
welcome, welcome, welcome,
yeah,
champ.
yeah. Well, I see the thing of it is I look at where the money is going to be going, like with this thing we got going on now. I knew there was going to be therapeutics, and there would be a sector just devoted to that to find a way to get past what we got going on now. So, excuse me, so things could open up. So first half of the summer, I kind of dedicated myself to the biotech sector just for the fact that I knew there was going to be a lot of money pouring into that sector.
Related to the cooties.
Yeah, so anything revolving around that, tech, logistics, science, distribution, just anything in that industry was going to make money because the government was throwing billions of dollars at it. So,
But before we get to that about this recent success, because he's gonna share some numbers, and I kind of left that up to them. I think that people, that's your right. You don't have to share
yeah.
numbers about what your percentage or what your balance is. I leave that up to the individual. But before we get to the strategy that you used in this past year, to really put you on a whole nother level, um, first explain. Let's see. At what point did you? When did you join the Patreon to start learning technical analysis? When was that? How long ago was that?
That was last year around the summertime. Well, I guess around spring, I think, because we talked one time and then you said you had a
No, it
Patreon.
was more. I don't think it was 19. I don't think it was 2020. I think the year time went so fast. I think it was
Mm,
2019.
it was.
It
Mm,
was. I don't think it was 20. Put it this way: you were on in the group before Lionel, right?
yeah, yeah.
And
It
Lionel
might have
is.
been.
It's been a year for Lionel, so you done missed the whole year, bro. We got videos of you and I doing penny stock talks that are a year old.
Yeah, yeah. That was when we start talking about the biotech space and the weed space. So I got yeah.
Yeah, so I think it's like 2 years now. So in that period, let's see, kind of if you can recall going back to that point, what was it like trying to negotiate what you used to do, and then looking at this technical way of looking at it?
Well,
What was that
well,
integration like?
well. I was forced to make some adjustments just for the simple fact that the Russell Index was under pressure. So, and the reason now why I've made some gains this year is because it was at an all time low. So now people with money are going to shift to, like you said, they're going to shift to sectors where the sector is oversold, and the Russell Index was oversold this year.
Right.
So so
Right.
that
It's,
just worked
and
out.
it's certain. So you got the everybody knows about the large caps. That's like your Apple and your largest companies in the 500 largest. That's your S&P 500. Then you got your another tier below that, and that's your mid caps. And then you got the small companies. That's the Russell 2000. So it's like the 2000 smallest. And then within that, there's a ghetto hood within the Russell 2000, and that's the micro cap space. And then they got another space even lower than that. That's really in the hood, the nano cap. I think they call them. And so when you start talking about the daggone micro cap, nano cap, you talking quote penny stocks. And these are companies that don't even trade on the daggone NASDAQ or New York Stock Exchange. And they trade over the counter. Okay. So it's a whole nother, they're not even reputable enough to get to the big leagues. Okay. But I maintain that technical analysis can be applied everywhere. And so he applied it. And but do you recall kind of sort of what your balance was like 2 years ago?
Uh, yeah. At one account, I had like 13K, and the other account was like 8K. Cause I have Charles Schwab and I have E Trade.
And how long did it take you? Had you been trading penny stocks to get to that level of a 13K account and an 8K account?
Man, 13 years, but I had one good year when Trump became president and he said he was for medical marijuana.
Mm-hmm.
I made 96K on one stock because I had bought it every time I got paid, and I started buying it at 2 cents, and it topped out around $3, and I eventually sold the pullback around $2.
So your strategy at that time, you kind of knew that the weed space was going to be hot. So you identified some stocks, and you pretty much kind of like had a buy and hold strategy. You were regularly investing.
Yeah, that was
Dollar cost
my
averaging, as it's called, dollar cost averaging. That was what your approach was.
yeah.
That was your philosophy for most of those. You said what, about 13 years? You said.
Yeah. So I had some hits and I had some misses and I had some situations where I should have took profits.
Right. See, yeah. See, if you when there's a saying in trading that the rising tide raises all boats and sinks all ships. So if the whole market is in an upswing and you're dollar cost averaging, yeah, you're going to be. I'm not saying that the people are wrong. They say that you're going to gain. Yeah, they're right because the tide raises all ships. Raises all boats, rising tide raises all boats. And so you're going to get caught up in that, and you will have a gain if if you're lucky enough to be using that strategy at a time when the market is still rising. And if you keep doing it, let's say you get in early, just by luck, when that sector or that industry is rising, and if you just keep investing on a regular basis, yeah, you will make money. Now, what technical analysis does on top of that is it helps you avoid those give backs, those big, huge give backs where you've made a nice sum and you're happy when you're looking at your portfolio and your statement, and then you have like disaster coming, you just lose half of it. Well, technical analysis, if you really on it, you'll get better over time. You'll be able to avoid most, if not all, of those situations. you know
Yeah.
so after those 13 years, and I'm gonna say not all of his success, I can't credit all of it to technical analysis and what I'm teaching, what I've been teaching. Part of it is being in the right place at the right time. We're in a this is a historic bull market. We've never seen anything like, we've never been to these, nobody alive has seen anything like this. Okay. So part of it was we're in a historic bull market and you're applying technical analysis to it. So that's so it's like a double edged sword there that's been the fuel for your gain. So along comes 2019, and we got to keep in mind the that the that thing that's going around, that word that we can't say. I call it the cooties. The cooties. The cooties didn't really hit America really until like we talking like a year ago, not quite a year ago from this point right here. So when we say about when we go back to 2019 when you were getting your gains, the cooties hadn't happened yet. Not
Yeah,
in America. It hadn't happened yet in America. It wasn't like controlling our reality. It was just this thing that we would hear about, we kind of watching sideways. But you came to the channel and you started implementing a few things. And then let's go back to uh last year. Like what was the before, I would say March. How did your portfolio handle the decline when the cooties hit and we had the big dip in the market? Now I'm saying, of course, everybody knows I'm a technical purist. The market was destined to decline anyway, and then the cooties thing came. But we talking about the decline from February to March last year. How did that affect you?
oh, I went up because I was in the space where the cooties was at. I
Right.
was in, I was I was in a space that was supposedly gonna have the solution to the cooties. So
Yeah.
I
So
was
most people lost money, but because in technical analysis, we look at where the money is going. We're not listening to the news and the rumor and what people are saying. We're looking at the chart and seeing what's actually happening, especially when you see industries that are like in the dirt. And then you have these other industries where the stocks have risen to the stratosphere. That money is got to go somewhere. And people, smart money managers, start looking for safer places to put it. And it's actually pretty safe to move that money to a beat down sector. And because
yeah,
it's already crawling along the bottom, it's like down is not for, but it's not that likely that industry is going to fall much further. It's already beaten in the dirt. Prices can only go up, down, or sideways. So down is a low probability that it's going to go down because it's already in the toilet. So that leaves sideways or up. So if you're sitting on a portfolio and you got all these big high flying winners and you're looking for a place to go, uh, people will pour that money into certain industries. I'm not saying penny stocks, directly to penny stocks. I'm not saying that. I'm saying they'll roll it into certain industries. And then what I do, and I said to Maddie, I'm like, so you can go watch how this money rotate to different industries. And then with that concept in mind, you can go look for the garbage penny stocks that are in those hot industries, because some of that money and that attention is going to fall to those stocks too. And
yeah,
that theory proved to be correct. Is so it doesn't mean that, I mean, some of these penny stock companies, who knows, they might end up being a real company with real profits and all that, but um we don't care. I mean, look, you got the big fish in the pharmaceutical sector is Pfizer. That's, you can pretty much treat them as the index. Pfizer. So with all the money that Pfizer and the bigger, Eli Lilly, the bigger companies, they're gonna, at the end of the day, probably gonna control whatever it is it comes out. But that still doesn't stop the smaller companies from getting caught up in the wave and the mania of the Modernas and different things like that. So you gave it a shot, and so your money went up. when
Yeah,
most of the market was going down.
yeah. And then we had that correction in the summertime, and I went down. I stayed flat a little bit, but then uh I found fine tech.
Are you talking about that's about when Moderna peaked?
Yeah,
Yeah, because I told
yeah,
we looked at the charts and I said, okay, this we're in the greedy area now. This is we looked at some big pharmaceutical plays, and they had already fulfilled their wave count. I don't want to get too deep in Elliott wave theory, but they'd already fulfilled their wave count, and they were like overbought on many ways that you can measure that. And it was time for a correction, for a
yeah,
pullback. And so, yeah,
yeah,
we knew it was coming. And so when that happened, we pretty much walked away from that whole space. But if you recall, I think that's when the weed stock started looking kind of interesting.
yeah, yeah. Weed, and then I went into fine tech because
Mm-hmm.
I found another penny stock that kicked me in the second gear,
Okay.
and then from there I was projecting Biden to win, so I went in the solar heavy, and I went in the EV electric vehicle sector heavy, and that's what boosted me over the top to where I'm at now. I've been taking profits the last couple of days.
Okay, brother, NBA 2K about what you can expect. I'm gonna answer that later, but I see you noted. I will address that. All right, so I'm gonna fast track it a little bit. Just kind of walk us through. I'm gonna let you handle it from here. So you told
Okay.
us it's about 2 years ago you had two accounts. One was at 13K, one was at 18K. And I'm just gonna lay back and let you walk us all the way up from those levels and culminating to where you are now.
Okay, so I was around those levels, and after that the Russell index was down. So I figured I had to learn some technical analysis because I couldn't do the buy and hold thing. It was gonna be like more like a swing trade type of deal, and so I realized I needed to pick up some more skills, related to technical analysis. So that's when I got heavy into your channel, and I tried to learn some techniques. I'm still not the best trader, but I understand the concept, the general concept, like the 61 retracement, the 38 retracement, the Elliott waves, uh, the stochastic RSI, overbought, oversold, those type of oscillators and indicators. I kind of got that concept down. It's just sometimes, like when you're looking at the Elliott wave, is it a ABC, or is it
Right.
a 1, 2, 3, or is it a fractal within a wave? Those,
Right.
those
Welcome to the
concepts are
struggle.
still.
Welcome to the struggle. Yeah, and that's just repetition. But yeah, that's right. That's right. It's a great accomplishment just to get to that level because you're about to, when you get to that point where you can explain just as much as you have just now, you're about to turn the corner.
Yeah,
So,
and then I was just gonna say, then with penny stocks, they're usually easy to chart because they'll make one extreme move or the next extreme move, or they'll go in a flow like 1, 2, 3, 4, 5. It's not like charting the Nasdaq where you got a lot of volume and institutions putting their money in or taking their money out. It's easier to track penny stocks as far as when it's
yeah, because
overbought, when
you
it's
got a couple of promoters driving the whole price.
over. Yeah,
So you really trading against this promoter or this small group of promoters. That's really what you're doing. And if you don't have some kind of strategy, some kind of some basis in technical analysis, because those promoters know technical analysis too.
yeah,
So if you know If you think trading the same philosophy that they are trading, then you kind of already know what they're going to do and where they're going
Yeah.
to do it. Now, if you don't know that, you're just the dumb money. You're not going to make it. You're not
Yeah.
going to make it.
Yeah, because this YouTuber the other day, that stock SNPW, I bought that at
Yeah,
0051 before the move, and he's a technical trader, but I don't know what happened, but he got caught holding the bag yesterday because
yeah.
it
Well, we
it
all going to
looked
make
like
mistakes from time. No, we're not going to be perfect at it, but yeah. You got to be. That's where the discipline comes in, and it's just that's that's the repetition, and that's why it's good to be in a group where you can keep each other honest.
yeah,
About that kind of thing.
like GameStop. I'm not gonna buy it simply because it's starting to move to an enormous amount. So hey, I just missed the boat on that one.
Right.
That's why
Yeah. Don't
I,
chase. Don't chase. No
unless I
FOMO.
unless I was like a like a George Washington Carver, you know, scientist on trading. That's the only way I would trade, GameStop.
Yeah.
But
No, you don't. You don't chase. Now what I don't want to spill all the beans here, but I like to watch what has been working. Okay. So when you see something that has been no, that doesn't mean I'm gonna throw money at something just because it popped. No, I'm looking at it. It popped. I look at the volume. Okay, it's good volume behind it. Look at the wave structure. There, once you understand the wave structure, you know where the buy points are. So if it rolls, it's going to come back down. It's going to come
yeah,
back down. You just got to have the patience to wait for that. And then there are I don't want to oversimplify it, but then there are ways you can see a bottom of a base established, and the use of that thing called a stop loss, which too many people don't use it,
yeah,
because
yeah,
these markets move so fast. You're not going to be able to get to your computer or your smartphone in time. You have to know some techniques and know how to move that stop loss to at least guarantee that you can keep most of the gain if it goes against you. But okay, so you're talking us up the money scale. So talk us on all up to where you are now.
Oh, I'm at six figures.
Okay.
So
And so that's
yeah,
a good place from your two accounts, you know.
yeah, yeah. Cause
Yeah. Now,
I did a
okay,
little
let
crypto
me
too.
ask you this. I don't know how specific you want to be, but six figures, it's a big range between one
Well,
hundred thousand and 999,000. I mean, Nick,
I'm almost two. I was over two yesterday, but then
two
the
what?
market
Two what?
corrected.
Spell it out, bro. Two what?
I think I was like 213. So
Two
now I'm like
$213?
K, 213K.
Yeah, see, you got to say that. You got to say that because you scared the hell out of me when you sent me that email and
So
you told. I'm like, whoa, whoa.
yeah,
So
yeah. So
that's some serious money. You know,
yeah.
that's a life changing amount of money. And I'm gonna say to you, I think that you need to at this amount of money, you need to get a financial advisor. Just have them on. I'm not saying financial planner,
Okay.
make financial planner. Just to have them on the team. You still gonna run your trading thing because you don't. In my opinion, you don't need them to help you with that.
Yeah,
Okay,
because
but just
what
like
my
life planning kinds of things. When you start talking about that kind of money, and you're in your what age are you in your late 30s, or where are you?
uh, I'm in my upper 40s.
Okay, upper 40s.
Yeah.
Okay, yeah. See, so in a decade, if you're in your upper 40s, so a decade from now, you'll be looking at thinking retirement or how soon can I get out. and retire. So I say getting a financial advisor on your team at this stage with this kind of money, they can really they at least hear what they got to say. you know
Okay.
in my opinion, a lot of what they say is like, for me, because I'm it's a little too conservative, but you still want to hear those ideas. You want to hear those
Yeah.
ideas, and then you'll make the decision about um when you want to implement. But they can lay a chart out for you to say, these are the things you need to be thinking about. This is what's ahead for you, and how you can really set yourself up to really protect yourself, and make things safe for yourself. And then you can slot those in according to your plan, your trading plan. You can begin to kind of aim for what for some of the targets that they're going to lay out for you. What you should be thinking about. Ways that you can increase your security. But that's
Yeah.
that's because for you to have gone from, let's just say, roughly 20,000, you had a 1,000% gain. Okay, to go from 20K to 200 and something K. That's a 1,000% gain, and you did that in about 2 years. That
Yeah.
uh, the industry standard for professionals is nowhere near that. The reason you had that gain was because you were trading extremely high risk items, but you applied some knowledge and some skill which helped mitigate that risk. And everybody that's making like really big money, I mean, there's like nice money that can help supplement your income, that can set you up to have a nice retirement when you get older. Then there's this kind of gain that can retire you earlier. The same thing you just did to go from 20K to 200K. If you are successful, and the way that you were able to avoid the downturn that happened in March a year ago, if you are able to do that again and have the same success that you just did, 1,000% from here is 2 million.
Yeah. Well,
So that's realistic for you, given the amount of research you do. You're not absent-minded. You're not buying and holding. It's like buying and being absent-minded, putting something on autopilot. Stuff is changing too fast out here to just be blind about what's going on with your money. You are an aggressive trader. Okay, so you're not absent-minded about what's going on with your money. So if you are able to repeat the success you just made over the last 2 years, mathematically, that projects to you 2 years from now having 2 million. And you won't be working until you're 65 or something like that, unless you want to. You mean, so forth, you could have a goal that you want to, not, quit your job in the next couple of years. I mean, at your rate, if you keep this rate up and you keep learning and staying disciplined, that's a realistic goal for you. That's not realistic for most people. So
yeah.
that's why I want you to put in your back of your mind. You need to, kind of go see a financial planner, because when they see that amount and they see the rate, how quick, that you got there from 20K to 200K in 2 years. When they see that, they're gonna think, like I just said, that in a couple of years this could be 2 million. Because but the idea is bringing some structure and some knowledge, some structure and discipline to a high risk area to get an uncommon gain. That's what people are doing that's making big money in the options market. That's what people are doing who are making big money in the futures market. That's what people are doing that's making big money in the Forex market. So yeah, all that stuff, and in Bitcoin and cryptocurrency, the people that are making that money, that's going to keep it. They're studying and grinding like you are. You um, quick money comes from taking those risks, but learning. I mean, going to those volatile areas. Let me put it that way: going to the volatile areas and learning how to manage the risk. That's the game, But as your account grows, you're probably going to pull back on some of that risk, because remember, you got all the way up there from just 20K. So your mindset will probably change a little bit as you looking at that big amount. And there's safer ways to still make a good gain without trolling around with that penny stock area. But you're good at it. So it's tough because you really are good at it. And so you're gonna have some thinking to do, especially when you go talk to a financial advisor. You might have to separate this money into different little pots where you still allow yourself to trade in this penny area, but take the lion's share of that money up, move it upstream to the more established companies and stuff. But you got time to figure that out. But yeah, you about to have what they call rich man problems.
Yeah, well, that was my plan, was to get this last little squeeze and then start over, like with maybe 5 grand, and find three, and just put like 17 or $1,600 in each three of them, and see what I could do with it. You know,
Yeah.
yeah, because the bulk of it, I'm taking that out and putting it somewhere, and then I'm gonna start over.
Right,
So,
because like what I do, me, I'm over there in the risky forex now, dabbling in the futures thing a little bit, but I have multiple strategies. I have ETF investing for retirement. So that's safer. So I may buy several ETFs. So that's diversified in and of itself right there in a sense. It's not fully diversified, but it's not like in one stock. Okay, so I may pick my personal method is I pick several industries now, and I'll rotate the money as the money rotates from one industry to another. But I don't particularly like buying individual company names because I don't want to do the research and keep up with that individual company. I'm not. I don't care about that. It's just not. I lose money messing around worrying about if that company going to be subject to a class action lawsuit. Is the CFO stealing money? Is the main CEO, is he gonna die? I ain't got time for all that. I just stick to, okay, this industry is growing, a lot of money flowing into it. I look at the market cap leaders. I look at the industry at large, and I apply technical analysis to a couple of industries. And I get an ETF that represents several industries, and so that's my retirement account approach. And I'm mostly looking at like weekly and monthly charts for that. So I'm not sitting there day trading my retirement account. So that's on what I call the slow train. I mean, this is just my opinion. What I do, you'll talk to your financial advisor, and you continue reading and growing like you are now, and you'll come up with what works for you. Now, there's a part of me that's a gunslinger. Okay, I'm a trader in my heart, and that's what when I'm trading forex and futures and that kind of stuff, and soon to be crypto. That's more in that day trading short-term swing trading where I might hold something for a couple of days or a couple of weeks. So it can be anything from a couple of hours that I hold something to a couple of weeks that I hold something. But that's got nothing to do with the retirement approach. That it's like two trains running. Okay. So it's a different level of risk for each of them. Brother Lionel just joined the show, and but let me say this: before I forget. What's up, Judge Zilla? I haven't seen you, brother, in a while. You know, on these streets. Let me shout out there, right? Iori, what's up? What's up, brother? Triple Lex, welcome, welcome. See who else we got in the house. Who else we got now? Freshest in class. Thank you for joining, brother. Truth be told. Okay, thank you, thank you. NBA 2K. I'm gonna get to your question right now. Darth Low IQ. Thank you. CR Frank been riding on with this channel for a while. Thank you, welcome. Okay, at the top of this chat, I got a link for Patreon, and I got a Cash App, I got a PayPal, then I got an affiliate link for a prop trading firm that I talked about yesterday. And so you'd have to listen to yesterday's show with featured Lionel. But before I want to answer NBA 2K, what happened? Here's how my approach on my Patreon. The price is low. That's right there. Put that out there first. There are people charging anywhere from $500 to $2,000 to learn technical analysis. In my opinion, they are worth what they're charging. Why do they charge so much and I charge so little? Because I don't have my stuff together organized like them. I don't have a slick website. I don't have these like slickly, tightly produced little modules with maybe like a written exam or something that you can take to get feedback. I haven't done all that work. If I do all that work, I'm gonna charge $2,000 also. Okay, so I'm gonna be straight up. I'm a capitalist. I'm gonna do it. So what I do is I have some videos where I explain the concepts. There are articles that I pulled from other sites. There are other videos with other people, other videos on YouTube. I refer people say, check this particular video out where people are explaining the same concept as me. I break down charts. I explain the whole concept. And then let me see. I break down the whole concept in video form. I supplement that with articles and stuff from out in the world, give it to you to read. I identify other YouTube traders who are, and I show you their video to have you watch it, so you can hear the symmetry between what I'm saying and what they're saying. I identify free sources of information out there that also supplements what I'm saying. What you need is a curator. You need somebody to guide you through to say, hey, listen to this information, but not that information. That other information, some of it you just need to ignore. Some of it is good, but it's not relevant to this style, this approach that I have. All I can teach is my approach. Okay, and so there are a couple technical analysis is a big umbrella, and underneath it are many strategies and approaches. I'm teaching you my approach. Once you get that foundation, you'll know enough to slide to. You can either just stay right there because you like it, or you might find some other closely related approaches that allow you to easily assimilate these other strategies. You can go from what I'm showing you to assimilate another strategy in about a week. You won't be studying for no months, because all the foundation that everybody's using is what is in what I'm teaching you. It's gonna now. As for those $2,000 courses, I got people in my group that come from some of those courses. It didn't work for them, and what I say to them is not that what they were teaching you is wrong. The problem with a lot of these courses, when people say I paid for this and I didn't get it, is that people learn at different rates. And you can buy somebody's course, and it's a video series, and it's not interactive with the instructor. That's one. Another problem is the video course will be limited, or the whole experience, the educational experience is time limited to 2 or 3 months. I understand why they do that, because they want to be free to live their life. So and so a lot of people sign up with those courses and they don't do the work. They don't read the materials. They don't apply themselves within the time frame given to them. And then when it doesn't work, they blame that instructor or that program. Usually it's the person that didn't apply themselves. Technical analysis takes a while to learn, because you have to go from understanding the theory to experiencing it in real time. And you need someone guiding you while you're experiencing it in real time. So when the market takes off on a good run, 6-9 month run, prices move a particular way in that environment. And your 3-month course is over. Okay, so now a big correction is coming, but you're not affiliated with that teacher anymore, because your 1 year or 3 months or whatever is up. And so when it starts to go through, the price starts to move through another part of a wave structure, you don't have the teacher saying, hey, look for this to happen, and start pointing out things along the way. And you see that kind of happen. That brings a calm to you, and you can negotiate it. And so now you're experiencing what you were reading. Then there's an emotional component to it, because there's like the greed and the fear stuff going on. It clouds your thinking, makes you do crazy stuff. But if you're in a community of people that's going through the same thing, and you got say you got your teacher and you got other students at different levels of awareness, they can talk you through that calmness, through that storm, to calm you down. And so that's what you get. You get a community, and you get someone to like navigate you in real time. So I can compress it all and tell you in 30 days. You can buy somebody's course, you can read all their material in 30 days. But all that stuff you reading, it's going to play out in real time over the course of a couple of years. So when you get in the fire for real, it's like when you get in the boxing ring for real, you got a short amount of time to show that you've mastered a whole lot of lessons, and you may not be able to pull it off. You're in that ring alone, So I hope I answered that question. So I want to welcome Ori to the channel too, and Lionel. If y'all want to say a few words to Maddie or respond to anything I just said, Lionel, I'll let you, since you popped up here first, I'll let you go. Speak your piece.
Oh, I just want to say congratulations to Maddie Go.
Man, you off mic, bro. Pull up to the bumper.
Oh yeah, you know what? Let me mute.
Yeah. I'm gonna go to Iori and let you do your thing, your mic magic.
Yeah.
Go for it, Iori.
Congratulations, bro.
Man, pull up on the mic, man.
No,
y'all know I am. Y'all know I'm a broadcast engineer. Y'all know that.
Hold on 1 second, guys. 1 second. Oh.
And I say that, and I ain't got the greatest mic, but dang, at least y'all can hear, brother.
All right. Can you hear me?
Yeah. Okay, go for it, Lionel. Okay. I already get closer to your mic while Lionel's going. Mute up, I already. Yeah,
I was saying congratulations to Maddie Ghost.
Oh, thanks, man. I appreciate it. I'm trying to get to your level of technical perfection, man.
hey, we all trying to get better. It's good that we push each other.
Yeah, no doubt. I know. I see you. I see Iori and a couple of other people, but I don't see all the members on the Patreon. Communicating.
Right, because if I'm trying to push some people off the porch You know, it's people been reading the material and they're kind of like a little gun shy. I'm pushing them off the porch, man. You're gonna see some more coming. You know.
Yeah, cause I'm the guinea pig, man. When I get the chart wrong, you let me know in front of everybody.
I try not to, man. I try. You know, I mean, I apologize for that. I know I'm wrong when I'm doing it, but sometimes I do it because I'm like, nah, man. Nah, you didn't come on, man. Not that mistake. So I shouldn't do that. But usually what happens is I have the people send the charts to the inbox. It's a Patreon inbox, and that's private. And so it's a lot of back and forth between me and other people in the group in private. And then when they get to a certain level where they got the basics, then I encourage them to share it with the rest of the group, you know.
Yeah, but I just want to make money, man. So whatever it takes, that's what I do.
So that's the attitude, man. You gotta look, everybody, look, y'all see me make mistakes, okay? So you're never going to get to that point where you're gonna be perfect with this. It's just not. It doesn't even happen, you know. I mean, I can even on the quote professional site, they make mistakes. It's all about risk management and your performance over time. So it's about winning. It's about cutting your losses short. That's the bottom line in all of this. I don't care what strategy you're using. The first thing you got to do is get your ego out of it and be able to admit when the trade is not working. You can mention any strategy, and the execution of that strategy comes down to getting out the daggone trade when it's not working. You can make money and be wrong 70% of the time. The issue is how much money do you lose? How long do you sit there and lose money before you say, look, this ain't working? So if you're good at accepting when you're wrong and exiting the trade, that's 30% of the time that you're right and you let your winners run. That will trump the 70% that you're wrong. I'm not saying that people on the channel are wrong 70% of the time. I'm making a point that as a trader, you can be. I've seen people do it. I've seen successful professional traders that's wrong. They're a little trigger happy. They pressing the daggone buy button too daggone fast, but they get out when it doesn't work. I mean, you know, I would say to them, you know, upon reflection, maybe you shouldn't press the daggone button that much, you know, but because they're disciplined and they get out, there's no real penalty for being wrong. You lose a few pennies, but then when they get it right, they get that one explosive move, just, you know, recoups all the, you know, losses that they might have had the last, you know, couple of days or couple of weeks. Now, I don't like that style, but discipline. Back to discipline. That's what it is. What's up, Iworry?
Hey, brother. My mic went out. Sorry about that. But yeah, man. Maddie, congratulations, bro. Shoot. I knew I knew you were doing good, man. But that's life changing right there. Shoot. That's awesome. You know what I mean?
Yeah.
And in terms of the chart thing, like that's something that happens to everybody because that's how we learn. So shout out to Dollar Will for doing what he's doing, man. Like that's the only way it'll get through to us sometimes. You know what I mean? Now I don't do anything without looking at a chart.
Right.
So,
right. And that's another
just part of the process.
Yeah, it takes a while when you're trading, when it's like everybody in the news is saying this, saying something, and everybody in the forum is saying something, but technical analysis is telling you to do something else. So it takes a while to get like comfortable with going against the herd. You know, you can see when the herd is wrong, they're getting ready to run right off the cliff. And, you know, it just takes a while to get to the point where we go, okay, I'm right and they're wrong. You know, you can't convince them, but, you know, and your money does does depend on a lot of people doing stupid stuff.
Right. 100%.
I mean, you wish you could save them, but then again, if you saved them, maybe you wouldn't make your money. I don't
100%.
know. I don't know.
100%. Yeah.
So that's kind of all I got. And I'll let y'all go around. Lionel, last word. Iori, last word. And we'll finish off with Maddie.
Oh, I don't have nothing.
Yeah, man. Like, all I can say is if y'all really want to learn how to do this stuff, the charts are the way forward, right? Like, I can't say that enough, because the thing is, when you're in a move, the charts are going to tell you how long to hold it and everything else like that. So without actually being able to project that, you can't really, like, you're going to end up selling early, and then you're going to see the move happen in front of you.
What did you study in school?
Me?
Yeah.
Basically, I was a finance major, and I was also a journalism major too. So
Did they teach you how to read charts in school?
No. You know, I had my red pill moment in school when I realized the stuff I wanted to learn, they weren't teaching me. But I had to get it on the under, because my economics teacher was like, hey, like, you want to learn this, like, go over here, kind of thing. You know what I mean? But it wasn't part of the curriculum. So.
Yeah, exactly. So yeah, it's like, I'm not gonna go after it. Let me just say this. You can be a PhD in finance. That doesn't mean you know how to trade.
Right.
Okay, I would just leave that right there. All right. So I think that everybody listening should. How I came to the technical side. I was a fundamental trader. I started like everybody else because that's what everybody says. All the main stuff that people say. I came upon that information about dollar cost averaging. If the company is doing well, the stock will do well. Right. And as long as the company is making money, you should see every dip in the stock price as an opportunity to buy it cheaper. All of that crap.
Right.
Okay. I came up through all of that crap. And then I got
technicals follow fundamentals. That whole thing. Technicals follow fundamentals. That's what they told us.
And just sitting there trying to say why somebody bought and sold. You never know why people bought and sold. You can't know that. Okay. So and then when the .com bubble happened, that was the Bitcoin or crypto for me in the 90s. It was the .com thing. We lost Maddie. He got kicked out. But that's when the talk and rage about Bitcoin and crypto in the 90s, it was about, the buzzwords was internet, anything, or .com. I mean, people was putting .com in the name, and the company had nothing to do with the internet, just like people putting blockchain and stuff in their name now. What they're doing has nothing to do with blockchain. All that kind of mania was going on in the 90s, and I still took a tank. I was pissed because I was doing everything that the fundamental folks say. I was subscribing to Money Magazine. I'm studying PE ratios, price to growth rates, price to book ratio. I'm just like got data over. I'm listening to earnings calls and all of this crap, man. I was deep in it. I was worse than the worst fundamental trader out here. I thought I had a handle on this because I knew nothing they said, none of that told me when to sell. And that's the number one thing I ask fundamental people when they think that they sound like they're logical, but they're not. And I say to them, at what point will you sell? They don't have an answer. because fundamental analysis does not provide an answer to that question. It's like as long as it keeps rising. Well, I mean, everybody knows nothing goes up forever. Well, on the technical side, there's some camps that have theories about how high something goes, and that Elliott wave theory would be one of those.
Yeah.
And then there are other techniques that show you when the trend is losing steam. There are methods about that. So we're not saying that with technical analysis you can, a lot of times we can say, hey, sometimes the price moves exactly to the daggone theory. Many times it does not. Okay, so sometimes you'll see here a market technician will say, the price can go up to this level. It'll pretty much do that. But then there are a few times it'll, go even higher than that. But what we're really doing is managing risk. What we're really saying is that the odds of you losing money are greater when it gets up to this level. And then there are like secondary signs of trend exhaustion you can look for and factor that in. And if you're smart, you'll move your stop loss up to a certain point so that it's like, okay, so if I'm wrong about it going higher and it falls, at least I'll get out with this gain. Right. And that's all you want. If you can catch 80% of the trend, you the dude, you the champ. And technical analysis has done its job. But I've come across, I'm gonna try to argue less in 2021 on these YouTube streets. I've heard people argue that, because I'm not calling something right to the penny, that means technical analysis doesn't work.
What?
I'm like, okay, so I was wrong, and the price went higher. Well, on the technical analysis, if it makes a higher high, I change my bias.
Right.
So, and then when it falls, it depends on how far it fell. So there are other it's price structure and all. Yeah, you got join the Patreon, get in the dialogue, or join somebody's group. Get you a technical guide and start to learn this stuff. Do not do it alone. When I got my head handed to me in the 90s with the .com implosion, I got pissed off, and I didn't turn the corner till I learned the question to ask. You know how they say the answer is in the question?
Right.
It took me a while for my brain to get around to asking the right question. And the question was, who made money when everything fell? Well, not everything doesn't fall. That's another thing. Everything doesn't fall. The news will have you thinking that everything is falling. Everything doesn't fall. All right. Who made money during the downturn? And what was their trading methodology? It took me a while to allow my brain to come up with that question, because the fundamental camp, they think that they're the smartest people in the room, and they're not.
Right.
Even with their PhD, they're not the smartest people in the room. They look like they're the smartest people in the room. They got the best suits, but they're not. So it just took me a while to realize that they're not the smartest people in the room. Okay, so now once I got that out of the way, then I said, well, okay, who are the smartest people in the room? Well, it would be the ones that made money on the way down. Okay, were they lucky, or do they have an ideology that works? And so I started following, people and reading about what they would mention certain words, and I would Google these words, and I came upon this term called technical analysis. Like, what the heck is that? Then I was on this trading game. It was a site called Wall Street Survivor. And the site still exists, but it's a different, they changed the focus of the site. They had a trading game back in the day on the site, and when you it was free, but you had to declare your trading style. And so some people were technical traders and some people were fundamental traders. And the fundamental traders, they had a leaderboard of the fundamental traders, and they had a leaderboard for the technical traders. And the fundamental traders were popping their and they had people working at, like, JP Morgan and major firms in there.
Yeah.
And they had friend lists and all the stuff like you got on Facebook. Facebook wasn't around, and so it's like serious traders, and so a lot of pros would come in there and test out strategies and stuff. And so you had, like, here I am, like, in their ear hustling, trying to understand what the heck they doing.
Right.
and so people would, like, add me to their friend list, and I would ask them, well, how did you know that this was going to do that? And they would be like, look, just Google these words and just, like, basically go away. Just they knowing that by the time I Google all these words, they would give me my eyeballs would roll over my head, and I'd get out of it. I'd leave them alone.
Right.
And so, like, and I start coming upon these words, and I start noticing on the fundamental leaderboard, they were popping their collars, man. The leader might have like a 20% gain. And he's, like, throwing up fists like he Rocky,
Right.
And I look over on the technical side, them dudes got 500% gain.
Right.
Whoa! I'm like, they playing a whole nother sport. Whole nother sport. And so then I started asking them questions, and they would say things like, price action and technical analysis and a few more buzzwords. And I had never heard those words before.
Right.
It was like this whole world was hidden from me. Then I learned that, this thing, technical analysis, has been around for over 100 years. I'm like, what? Why don't those smart people, why weren't they saying this? Now, then when I got into it more, I realized that a lot of those smart people are just lying. They're just straight up lying. They are technical traders lying, because the academy doesn't respect technical analysis, but it works. They know it works. So they use technical analysis, but they don't carry the flag. And how I know they're technical traders and they're just liars is when they sell at these technical levels. And there's nothing in the school of thought of fundamental analysis that would have told them to sell right there.
Right.
And you see that pattern happening
and you see that all the time.
Yeah, I turn on Mad Money. I like Jim Cramer. And, I'm not gonna criticize. I'm not gonna criticize because he used to be strongly fundamental. And then when in that 2007 to 2009 crash when he had his conniption, they know nothing and all of that.
Yeah, Washington Mutual happened.
In that he gained a newfound respect for the technicals, because he used to call it hocus pocus and speak badly about it. And now he's got a segment dedicated to it weekly, and he would bring in some of the best technical technicians, market technicians. And over the years, he has become actually a very good chart reader himself. And every Tuesday, he has it's from the charts. I think that's what it's called. And so he had to get his butt whooping. And I was saying back in 2007 and 8 and 9 that if he doesn't change that opinion, they're gonna drive him off TV. And he ate that crow. And now he embraces the technicals along with the fundamentals. So if you want to do the fundamentals, add the technicals to it. The fundamentals are great for comparing, say, one company to another in terms of their business, the profitability of their business. Or if you want to compare one company with a company that's in an entirely different industry, that's like apples and oranges. Like, what does selling software have to do with selling candy bars, or something? But the stuff that the accountants are looking at, fundamental analysis allows you to create a level playing field to compare the business activity of these two companies. So it's valuable in that way. But technicals will tell you when is the right time to act on that fundamental opinion. Because a company has a good business model and their approach makes logical sense, that does not necessarily mean that that stock is going to move. And that's why you hear the presidents of these companies, when the reporters try to make them responsible for the decline in the stock price, the CEO will say something, to the effect that, we're not managing stock price, we're managing a company, and they're right. And so when the stock price go up, the CEO will take credit for it. But when the price goes down, he'll say, well, that's got nothing to do with the business. The business is fine. And they don't talk about the fundamentals now. I'm like, they need to not play that game. If you're going to take credit for the stock price going up, then you got to take the blame when the stock price goes down. But the fact is that the price of the stock and the performance of the company it's not a one-to-one cause and effect relationship. It's close. It's a correlation. It's not a causation thing. And but I don't want to y'all get me rambling on that. But yeah, so that's some of the stuff I had to get clear about. And the more I got clear about it, the more I became a weirdo in the trading space, because if you're not a technical trader, can't really have a dialogue for long with a fundamental trader. We just speak different languages and see things differently, But if you combine if you add the technicals to your fundamentals, then now you cooking with gas. Now you got the winning formula at that point, because a good sector will drag up the garbage company. The companies that's like not making any money, those stocks will rise too. The tide rate rises all boats. And when that industry, when the prices get overbought, the money managers start thinking, how can I keep this? Because they get evaluated on quarterly performance. Not so you got the corporations giving you quarterly earnings, and you got the money managers. They are also evaluated based on their quarterly performance. So at some point, that money, they start thinking, I gotta book this gain. And you especially see some funny stuff at the end of every quarter, because you get your statement in the mail quarterly. So they're gonna make sure that they're gonna try to hold that thing if they can through the quarter, and then rotate out of it before it falls. And so those money managers, it's like a herd mentality takes over, and the same money that made the stock price go up, or the same people that drove the price up, those same people will drive the price down, because the price is severely overbought, and nobody wants to take that loss on that correction. And so when that quarter ends, everybody heads for the door, and you see this big steep decline. And then once it's fallen the requisite amount, they come right back. The same people that sold turn right back around and buy back in.
Right.
At a safer level, because now they know that we've started a new swing higher, and their money is safer at that price level than at that higher point. And so technical analysis, you learn to watch all of that,
Right. 100%.
But that is it. Let's see. I'm gonna see if is Manny gonna come back or not. He's got some technical issues, I guess. I'm gonna shut it down. I'm gonna give him 1 or 2 minutes, and then I'm gonna shut it down and see what we got here. Lunchtime is over. Back to work. All right, Georgilla. I said, well, not the previous comment. I was responding to Will, not the previous comment. That little confusion in the chat. Oh, I don't know what he's talking about. The trend is your friend. Yep, he's right. Long term. Yeah, that's right. Not saying that you can't make money here. Just do not be the last one in. Right. Yep. And the technicals help you kind of gain that. The thing that gets me is that the stuff that you hear in the news are telling you what you should do. That's not what the big money traders do.
Right.
It's like they got this separate plan to keep the public the dumb money.
Yeah, it's funny you mentioned that, because even inside of technical analysis, there's levels in terms of technical analysis, because sometimes you'll have these traders, or these CNBC traders anyway, or TV traders, and they'll be like, oh, well, where do you think the stock is going to go? And they'll say, we don't know. And then what they'll do is they'll have some dude who's like a chart technician show up, and then
Right.
he'll be the one. He'll be the one. I'm sorry. That'll basically be like, okay, it's here. It looks like it's going up here, and that's where it seems like it's going after this retracement.
Yeah, that's what I wanted to say. Start taking notes, not just of me, everybody, all of us technicians, and even the fundamental people. Start writing down what they said, saving the videos. And when I say save it, I'm not talking about the link, because what you'll find is when you want to go back and watch that video of what that guy was saying in February before the market declined, that video has been removed.
Right.
So until you get to that point, you start taking notes of who's saying what. You're not going to know who's right and who's wrong, because people just take it on blind faith that these people on TV in these nice suits and somebody, with finance PhD or whatever, that what they're saying is right, but nobody really tests them.
Right.
So test everybody. Start keeping notes of what everybody's saying, and you'll begin to a pattern will develop, and you'll see it unfold. So we got Maddie back. So yeah, brother. Maddie.
Yeah. I had to put my phone on charge. I didn't realize the charge went so low.
Yeah, you got the last word.
Oh, I was just say, look at what's oversold, what sectors are oversold and preload before the run. So right now I'm looking at weed, and I'm looking at solar for the next iteration later on this year.
Mm-hmm.
Yeah, we're gonna talk about that one, because that's very tied to the dollar thing, and yeah. I mean, I don't think this market is done. I think we're gonna have we got a little whipsaw coming. Okay, we got and that could be likely to be in February, I'm not gonna say early or late, February, coming up soon. I'll be doing a show about the S&P and all that specifically, and in that, when I'm looking at those charts, I'll make a more a tighter. I'll close that window. Okay.
Okay.
But that, I don't think that's the end. This market has got it wants to go higher. It's going to whipsaw a little bit. But I'm going to be, when we get around April, May, you're going to hear me talking that bear talk again. Now, when the market went last year, I was wrong. A lot of us technical traders was wrong. That decline. Now, the thing about that decline, it didn't take out a key low. And that's when I was like, okay, and then when it started rising up, it went straight up. And that means something in terms of what that next wave structure is. And at some point in there, and it's all in the videos, y'all can see it. And I said, okay, I don't know, this thing, it has gone a little too high for this to be a correction. And then when it made that higher high, it went higher than that February high, then that, irrespective of what I thought and what I feel, I had to respect what that technical move suggests. And that technical move, just the fact of it making a higher high, suggests that we got a whole nother leg, from Elliott waves, in an Elliott wave theory sense, we had a whole nother 5 count. And that's why y'all don't see no more video. You hear no more videos from me about the skies falling It's like, okay, we got to wrap our head around this, and that's a perfect example of how technical analysis works. So that big dip, you did hear me saying beforehand that was coming. I'll say, so fine, you can just assume that I didn't lose no money on that. Now on the recoil, the retest of the high, the journey back up to that point is so profitable. It's not uncommon for a technical trader to get back in the market and be long, although we don't believe it's going to make a higher high. So we could be back in the market riding that up with our finger on the trigger to get back out.
Right.
And then you see the thing keep going up. So those signs of exhaustion and stuff I was saying, or you draw a line in the sand and say the price, if it falls below here, then that's trouble, and then that stuff doesn't happen. You go, wait a minute, okay, this price is not acting like a bearish move. And at some point, you just have to say it's not. And then when it sets a new high, then you really got to accept it. Now, so it made a new high. So we technicians, we go, okay, it made a new high, but it's overbought again. So it's time for it to have a pullback. But so now I'm in my mind is thinking we're going to have a pullback, but we're not going to make a new low. So this is a minor pullback, not like the resumption of the downtrend. This is just a healthy, normal pullback, that's normal part of a general uptrend. So your mind flips like that. So this is how you're looking at the probability, what's most likely to happen given the signals that you're getting on the charts and with your oscillators and studying the price movement, how it relates to the theory or the various theories. And that puts you in not the perfect situation to like get out at the right penny. It puts you in a situation to still gain. And even if the price is doing something different than what you projected, because there's one thing, there's your projection, then there's what the price is actually doing. And so when you see the price doing something different from your projection, you go with what the price is doing. Okay. And over time, it's like a puzzle where when you're like putting together a puzzle and you got all the million pieces on the floor, that puzzle or Wheel of Fortune, you turn over enough vowels, at some point, you know what the word is. And trading is like that because prices move in a certain pattern. And if your mind is twisted thinking it's going to go down, but it's actually going up, that price will start to do things because you know what that movement is. And you go, okay, that's not a bearish move. So now I got to flip my bias to what this thing is actually doing. Although my projection was basically wrong. And so then you go back, we look at other higher time frames and we say, okay, so it looks, and we may have only been looking 5 years. So then you go back when you see the price doing something different, you look at 10 years, 20 years, 30 years, and you see that price structure, you go, okay, that makes, maybe this is what's happening now. And so it's like a process of elimination, and you move your stop loss up. And as more information becomes available with that price movement, then it starts looking more and more familiar to you over time. And then you go, okay, this is it now. Here's my now I've gone from bearish to bullish. Now here's the new line in the sand as long as it trades up according to this, make these price movements, these price surges within this channel, everything is on schedule to meet these next levels. So it's like a process of elimination that you go through. And that process includes sometimes being out of the market. When you get confused about what's going on, just get out until it starts making sense. And the price will start making sense. And then you get back in and you really haven't lost anything. So It's a process. I don't think I did a good job explaining it right, just there, but that's what it is. There are times when the price will do something that's not keeping in with what our projection was, and that's because the projection was wrong. So the sooner you realize that, the sooner you get back on track. But it all comes out in the wash. And so that's why those of you that are watching my channel, you see me make wrong calls and you see me make right calls, and you have to weigh it out over time. None of us are going to be 100% perfect, but we are if we follow the trend is your friend. If you get your ego out of it and you trade what you see as opposed to what you think, that's the battle. And we all fighting that battle. It's like you're forming an opinion based on the charts, but the price movement to come can contradict that. And so now you have to be open-minded enough to let it go. Let that prior opinion go and accept what the current what the new structure is, not just today's price, but today's in this week's price relative to the past information. Tough. You see why we're crazy. I don't think is he back, Maddie? No, he is back. Yeah. So that's trading. And when you watch people's channel over time, just know that that's what we're struggling with. We're dealing with probability, and we're looking at price structure. And if you want to get into this game, join me on my Patreon or join another site. But you got to get into this game. You got to get in this dialogue. Watch. There's a program on CNBC called Fast Money. It comes on. Is it still? I haven't watched it in a while. Does it still come on after Mad Money?
I think so.
Okay, that program, Fast Money, has a little more of a technical bent. And if you watch that show, because they will go to the charts a lot on that show. And so they'll argue a fundamental argument, and then they'll go to the charts, and you can kind of see how they balance these two schools of thought, the fundamentals and the technicals. So I recommend people watch that show, and you'll see them conform to what the technicals say, despite their fundamental opinion. And that show is not promoted enough, because they get in their feelings and their emotions too. We're human, and so they wedded to a fundamental opinion, but because they respect the charts on that show, they say, okay, it's time for me to take some off the top, or maybe it's time for me to sit on the sideline. And it's called Fast Money for a reason, so they're not on there talking about long-term investing.
Right.
Okay. They're talking about fast money. How you gonna make money this week, this month, this quarter. That's the way they looking at it. And so give that show a shot. Work that in. If as far as TV stuff goes, that's a show that I recommend. And I don't know if this guy's still on there. His name is Carter Worth. He's a bad dude with them charts.
Yeah, he is.
Okay. Yeah. He's one of the few chartists out there. One of the very few. If he says something that's different from what I'm saying, I go back and study harder. I'm not saying that I changed my opinion, but I go back and really, really double, triple check. Because that guy's good.
He's the guy they go to when nobody else knows what's going on. That's that dude I was talking about earlier.
Yeah, and then there's this old woman. What's her name? Denise Yamada or something like that. Yeah, man, she's real good. Yeah. So in a sea of all that, it's a lot of bad stuff on TV on the money channels that you can just ignore. but what's her name, Denise Yamada, I think, and Carter Worth, that's must see. That's must see. So like when I'm a lot of times when I'm gonna make a real hard opinion, I want to know what they think. Because I mean I'm at the point now that there have been times when I'm right and they wrong, but I still respect their, because I make enough mistakes too. I'm humble to that. So you get to a certain level, and there's some YouTubers whose opinion I respect, and I post videos on my Patreon of people, of other chart readers who I respect, and so you can clearly see that I'm trying to tell you to watch these people. You know, and we don't always agree, but we'll always make a technical argument for why we're taking a particular position, and we'll point out a price level. It's got to do this. It's like a if then thing, if then scenario. If the price does this, then this is the bias. If it doesn't, then I'm gonna be a little suspicious. Right. So technical analysis is not like, you know, a Swami. I predict next Thursday at 3 p.m. it's going to do this. I'm saying, well, the probability is that it's going to do this based on what's happening, or based on the information that's available to us right now. That price can do something that throws that off, you know. And so there's a period where we don't know. There could be a day or week where the price is going sideways. I don't know. You know. And so it's like, as long as it stays above this level, I don't know, and unless it goes higher than that level. So we just kind of in no man's land between now and then. So that's it. It's probability. And, you know, because you're trying to make money, but you also try not to give it back once you've won it. But that's it. I've rambled too much. This thing has went on way too long. And I'm going to get back to my futures. And so I can qualify like Lionel.
There you go.
Yeah. All right. Peace. Peace, everybody. I should get some. There'll be some other programs coming up. I have not looked at marijuana in a while. I'm gonna do that. I mean, I even got a Bitcoin. I'm gonna, let me say, crypto thing. I'm probably going to do something with that. So there should be some other videos coming up in the next couple of days, as this is the last reveal, you know. Any other peak performers, you know, they're in development. I'm trying to, like I said, I'm trying to push some people off the porch, you know, to get a little bit busier, and in Patreon to really get in the game. And but like I said, stand by for some other charts. Peace. I'm out.
All right, bro. I'm off.